Hello guys, welcome back to my channel. I believe trading has been fair to you. I believe you've been doing so great out there. Last week we made a lot of analysis, out of which a lot of them played out perfectly. So this is the new week and I'm here to share my thoughts again on the Euro USD market. Looking at this chart, this is a brief overview of my stand or of my or idea on what will play out on the Euro USD market this week. As you can see, this full upward surge, we have not returned to the 50% level. I think we returned to the 50% level here, but I think there's still room to go to the downside. So I'm going to take out these things, these markings, so we can do a fresh analysis. No, I'm going to leave this. This is the 50% mark of this imbalance between here and here. This uh, Thursday's candle came into the imbalance but did not get to the 50% level. So I think it's still relevant. So this is just a directional path down to this place. So I'm going to remove it for now and I'll take out this. We already know how market moves. Market does not move in one direction indefinitely. It goes up, then down, up, down, up, down. It comes down a bit so that it can generate enough liquidity to go up. So right now, if you look at the weekly chart, you'll notice that we are in a range. Ignore this. Let me hide it. Okay, let me leave this one. If you zoom in, you will notice this range. This is a rough marking anyway. So price is still within this place. You can see this kind of rejection that we saw here is what we saw here. So I think price is headed downward. It's definitely downward. We are still within the range and I think we'll need to get to the tip of this before a decisive breakout. So let me remove this. So back to the daily. So looking from this macro standpoint, my first target would be this low. This low. This Thursday's low. Yes, this will be my first target. Then ultimate target would be this 50% of this imbalance. So let's look at how things are looking in the 4 hour. So if you're already aware of how I trade, I would mark out points of interest that I consider significant. This is one. So price have tapped into it and almost returned into it today. So I think there is no more desire to go upward for market. I think price will just go down and take out this low. There is nothing else inhibiting it now, and I think if it does, it's going to go through this place, and the next place that could form a reaction or could cause a reaction will be here, this other block. or this one. So that means this will be easily swept. So this is my analysis for this week. So I think as price has gone into this order block is very significant. As you can see, it caused this huge downward move and it took liquidity before it did so. So this order block is very significant. So as we have tapped into it, I think it's done, and this imbalance have also been closed. Okay, let me just share three things that make an order block very significant. Is one, it took liquidity, it caused a break of structure, and it left an imbalance. These three things make an order block highly probable. It makes an order block a high probability one. So this is what we saw here, and price have tapped into it again. If we look at the 1 hour, I think it will be clearer. As you can see, price have gone in, come here again, and we are displacing downward now. So this is how to do your top down analysis. On the 15 minutes, you could see a sweep of these levels. You can see a sweep of these two levels swept here, and we're about to create a change of structure downward. If this happens, then what you should do is like this, wait for a retracement here, and this is what to do. You know what I mean. So this is what to expect down to this point. So for me, you enter at this 15-minute time frame if you're a conservative trader, because here you're going to get a lower risk to reward. But if you want the best trade entry, you're going to be looking for it here at the 3 minutes or 5 minutes. As you can see, we have broken through this place, this swing low. So you could measure here to this point. Let me zoom in. You see that you could measure this. You can also measure the body to body, but for the purpose of this teaching, I'm going to measure the wicks. So as you can see at this point, we almost return to the 50% level, and you see could have been tapped in and will be headed downwards, but that's not to mean that the market has gone. You could wait again, and then you can wait and wait for this place to be taken out. You see, as market is building liquidity here, you can see how market is building liquidity here. It will come down to take it. As soon as it does, you can measure from here or here to wherever it stops, and then enter and ride the market down. This is my idea. It's a trade idea. You must not do it. The aim is to help you simplify trading and make things easy for you. So with this, if you like what I'm doing on this channel, please like and subscribe, and then click the notification bell so that you'll be getting my analysis every week. Thank you so much. See you on the